Swayam Prabha. Digital India. Educated India.
Yoga Karmasu Kaushalam.
Hello students, I, Dr. Dhaval Nukum from Gujarat University welcomes you all to the fourth part of the fundamentals of accountancy. Previously we have covered terms of accounting. The meaning of each term is very precise and accurate. These terms eliminate unnecessary disputes between the tax authorities and account preparers. For example, a trade discount is a discount that does not appear in the final account, whereas a cash discount is recorded in the books of accounts. Under the GST Act, a discount is allowed upon fulfillment of specified conditions, and final accounts are the final destination of financial accounting. There are two important components of final accounts: the profit and loss account. In case of companies, it is the income statement, and the balance sheet. These terms have specific place in the final accounts, that is in the profit and loss account and the balance sheet. In this four part of fundamentals of accountancy, we will go ahead and understand first concept of double entry bookkeeping system, second features of double entry system, stages of double entry system, benefits of the double entry system, dual accounting effect through the illustrations, and lastly the types of accounts and their debit credit rules. Before we move ahead with today's core concepts, let us remember types of transactions. Accounts are prepared using two methods. One is Deshinama system and second is double entry system. In the context of the double entry system, we will discuss its different aspects. Let us commence with the concept of double entry bookkeeping system. Before understanding the double entry bookkeeping system, let us know certain other basic aspects in this regard. Only economic business transactions are recorded in the books of accounts of any business unit. No personal transactions are recorded, and then there are specific conditions for recording the transactions in the books of accounts, and these conditions are: first is it has to be a business transaction. No personal transaction is recorded in the books of accounts. Then it has to be an economic transaction of the business only. So, business transaction can either be in the cash or credit form, and business transaction can be either the external or internal. We have already discussed internal liability and external liability in previous session. So, in brief, a business transaction means the exchange of products or services of a business for cash or on credit between two or more persons. These transactions will take place in different manners. Let us see the nature of these transactions. First is one person takes benefit from another person. So, it is a transaction between the persons. Then second is increase or decrease in the assets and liabilities. So, it is related with the assets and liabilities of the business. And then third is realization of income and payment of expenses. So, related to the income and expenses of the business. So, in a way, all these transactions will have two accounting effects under the double entry system. The first effect is the debit effect and the second effect is the credit effect. The total of the debit and credit effect always remains identical, that is same. It means two accounts are affected in the double entry system. If more than two accounts are affected, the sum of the debit entries must be equal to the sum of the credit entries, and at the end of any day, the total of the debit amount and the total of the credit amount shall remain equal. Let us discuss the features of double entry system which explains its structure as well. So, the features of double entry system. The very first feature of double entry system is each and every transaction of business is recorded. And second is it has fold accounting effect in two ways, the receiving value and the giving value, and which is also reflecting from the given picture as well. The third feature is debit and credit rule is always followed. Thus, for each transaction, two effects are recorded in the books of account. And the last and fourth feature is arithmetical accuracy. Due to the equal total of debit and credit, arithmetical accuracy is established. The double entry system is to be followed in chronological order only. It has well defined stages, and let us understand these stages for better knowledge of the double entry system. Stages of the double entry system. The double entry system is recognized as a scientific and complete system of accounting. The commencement stage of the double entry system is recording the transactions in the journal entry and ends with the preparation of the final accounts. There is a chronological order to this system which is divided into the different stages. The first stage is recording of transaction in the journal. The second stage is posting of transactions in the respective ledger and transfer of closing balances of all opened accounts to the trial balance. In the third stage, books are closed and final accounts are prepared. So, the double entry system which follows the chronological order, that is, we cannot proceed with the third stage until and unless the second stage is completed. Now, we will see the benefits of the double entry system. The first benefit of double entry bookkeeping system is scientific system. It is based on the debit credit rules of accounting. Thus, no subjectivity is permissible, and therefore, in that way it is a scientific system. Second is comprehensive record of transactions. Accounting has four important components like assets, liabilities, income and expenses. Each component is recorded in the books. The third benefit is it provides facility of arithmetical accuracy. There is a preparation of trial balance where balances of all accounts are displayed and where the total of debit balance and credit balance must be equal. Through trial balance, arithmetical accuracy can be examined. The fourth benefit is profitability performance measurement. One of the important component of final account is the profit and loss account. It deals only with transactions of revenue income and revenue expenses. These are the regular transactions of the business, and at the end of the year, the difference between these income and expense is ascertained and result is either a profit or loss. The fifth benefit is financial position. The financial position can be seen from the balance sheet. The financial position is associated with solvency. When net assets, that is the total assets minus the total liabilities, are higher, it indicates good financial solvency, and vice versa for the negative net assets. Sixth is comparison of accounts. Throughout the life of the business, accounts are prepared on the basis of prescribed rules, principles and standards. These quality of double entry system makes account comparable. The seventh is managerial decision. Final accounts prepared under double entry system provides information about the historical results, and these results help management to develop the future strategies. Then eighth and the final benefit we can say is the fraud detection. This accounting system is scientific and rules based. Any fraud or misappropriation of funds can be ascertained through the proper investigation. Now, let us understand the dual effect of transactions with the help of illustration. Illustration 1. Explain the dual effects for given business transactions of Sweta. The very first transaction is Sweta introduced capital of rupees 5 lakh and started a business. This particular transaction is related with the capital. Second transaction is account is opened with Bank of Baroda and deposited rupees 1,50,000 in bank account. This transaction is related with the bank transaction. The third transaction is goods purchased from Dhawal for rupees 40,000. This particular transaction is related with the credit purchase. As name Dhawal is mentioned and there is not any mention of the cash word. So, this particular transaction is related with the credit purchase. The fourth transaction is goods of rupees 50,000 sold to the Pankaj. Again in this transaction the name is mentioned Pankaj, but cash word is not mentioned. So, we can say it is a transaction of credit sales of goods. The fifth transaction is goods of rupees 25,000 sold to Ramesh on cash. Now, in this particular transaction the word Ramesh is given and also the word cash is given. So, this particular transaction is related with the cash sales. The sixth transaction is goods of rupees 20,000 purchased from Komal on cash. Now, again it is repeating like same, the word Komal is mentioned and word cash is also mentioned. So, it is a transaction of cash purchase of goods. Seventh transaction is rent paid rupees 2,900. Eighth transaction is wages paid rupees 500. Ninth transaction is salary paid rupees 1,500. All these three transactions are related with the expenses of the business. The 10th transaction is Pankaj gave check of rupees 50,000. So, we are receiving receipt from the our debtor. And 11th transaction is check is issued to Dhawal for rupees 40,000. Again it is a transaction of the creditor. Now, we will see how dual effects of these transactions took place in the books of Sweta. The first transaction was Sweta introduced capital of rupees 5 lakh in cash and started the business. The first effect goes to the cash account as cash comes in the business, and second effect goes to the owner's account, owner's capital account, as capital is introduced by the owner, that is Sweta. Second transaction is account opened with the Bank of Baroda and deposited rupees 1,50,000 in bank account. The first effect is bank is receiver and effect goes to the bank account, and the second effect is cash is going out of the business. So, effect goes to the cash account. Next transaction is goods purchased from Dhawal for rupees 40,000. The first effect is goods comes in the business. So, effect goes to the purchase account, and second effect is Dhawal is giver. So, effect goes to the Dhawal's account. Next transaction is goods of rupees 50,000 sold to Pankaj. The first effect is Pankaj is the receiver. So, effect goes to the Pankaj's account, and second effect is goods is going out of the business. So, effect goes to the sales account. Next transaction is goods of rupees 25,000 sold to Ramesh on cash. Here cash comes in. So, the first effect goes to the cash account, and second effect is goods is going out of the business. So, goods goes out, effect goes to the sales account. Next transaction is goods of rupees 20,000 purchased from Komal on cash basis. So, whenever we are purchasing goods on cash, goods is coming in the business. So, we can say effect goes to the purchase account, and second effect, that is cash is paid. So, effect goes to the cash account. Next, seventh transaction is rent paid rupees 2,900. The first effect is rent paid. So, it is an expense. So, effect goes to the rent account, and second effect, we are paying the rent. So, cash is going out of the business. So, effect goes to the cash account. Next transaction is wages paid rupees 500, which is again the similar expenses paid. So, effect goes to the wages account, and second effect is cash is going out of the business. So, again cash account will be treated as second effect. Next transaction is salary paid rupees 1,500. The first effect is again same, expenses paid. So, effect goes to the salary account, and second effect, cash is going out of the business. So, effect goes to the cash account. Next transaction is Pankaj give check of rupees 50,000. Now here, whenever we are receiving a check, it will be deposited in the bank account. So bank becomes the receiver, so effect goes to the bank account. And second effect is Pankaj is the giver, so effect goes to the Pankaj's account. Now next and last transaction is check issued to Dhaval for rupees 40,000. The first effect is Dhaval is the receiver, as we have issued the check to the Dhaval, so effect goes to the Dhaval's account. And second effect is, as we have issued the check, bank will become the giver, so effect goes to the bank account. Now after having understanding on dual effects of business transaction, now we will acquire information about types of account and their rules. In a business, a significant number of transactions pertain to a certain item and persons. For example, Mr. X is a customer of the company and engages in transaction with the company. So averaging one transaction per week, so we can say a summary of transaction done with Mr. X will be available in one place, and that one place is called the account. Thus, there will be roughly 50 transactions with Mr. X during one particular year. So an account is a summary of every separate transaction, and these transactions may have effect on the debit side or credit side of Mr. X's account. A summary of transactions done with Mr. X during the year will be available by preparing an account of Mr. X. Here, Mr. X account is a personal account because it discloses information about transaction with Mr. X. There can be transaction for goods, income, expenses, assets, liabilities, etc. And each will have its respective account in the books of accounts. Being science, accounting has a set of rules, and based on these rules, accounts are categorized into three categories. The classification of account is important to understand, and clarity of types of account will help you understand accounting in a comfortable manner. Let us see the classification of accounts. Each head of account include different type of sub account, and all the accounts have their rules. Before having information about rules, let us understand the meaning and relevance of these accounts. The first is personal account. The name itself explains the meaning of these accounts. Different natural persons and artificial persons are included in personal account. These accounts include individuals, partnership firms, companies, cooperative societies, debtors, creditors, banks, capital, and drawings account. For example, Ramesh account, Paresh's account, Seema's account are the personal account of natural persons. For example, B's firm account, X limited company's account, and Radha cooperative store account are accounts of the artificial persons. The main purpose of preparing personal account is to know the balance due to or due from persons or organizations. Generally, personal accounts are placed in the balance sheet either on the liability side or on the asset side. The rule of debit and credit for the personal account is debit the receiver and credit the giver. You have to remember these particular rules. The second is impersonal account. These accounts include all other non-personal accounts such as machine account, furniture account, investment account, rent account, salary account, cash account, interest account, commission account, etc. Impersonal accounts are further categorized into two categories. One is real account and second is nominal account. We will see what is real account. These accounts are related to the tangible and intangible assets, excluding debtors and bank accounts of the business unit like machinery, furniture, investment, stock, cash in hand, land and building are illustrations of the tangible assets, whereas intangible assets include goodwill, patent, trademark, copyright, etc. The main purpose of these accounts is to know their balance at the end of the respective year. Generally, real accounts are placed on the asset side of the balance sheet. The rule of real accounts is debit whatever comes in and credit whatever goes out. You have to remember debit whatever comes in and credit whatever goes out. The second is nominal account. These accounts record routine transactions of the business and are revenue in nature. These accounts include rent paid, rent received, commission paid, commission received, interest paid, interest received, and these items can be in the form of expenses as well as income. Wages paid, carriage inward, carriage outward, etc. all are expenses of the business. The main purpose of these accounts is to ascertain profit or loss earned or incurred by the firm. All nominal accounts appear in the profit and loss account only. The rule of nominal account is debit all the expenses and losses and credit all the incomes and gain. Now, it is important to note that if a prefix or suffix like outstanding, prepaid or accrued is added to a nominal account, it will be treated as a personal account. They will become the items of the balance sheet. And just to develop more insight, let us see one illustration to recognize nature of accounts from given accounts. First is purchase account. Now, purchase account is considered as the real account because goods comes in the business. Second is stock account. Now, stock of goods is also considered as the assets of the business. So, again it will be treated as the real account. Third is sales account. Now, sales account is also a real account because sale of goods is an asset of the business. Fourth is wages account. Now, wages account will be considered as the nominal account as it is the expense of the business. So, whenever we see expense or income of the business, it will be treated as the nominal account. Fifth is carriage inward account. Carriage inward is also an expense of the business. So, it is again treated as a nominal account. Next is carriage outward expense account. So, carriage outward is also the expense of the business and same it is also treated as the nominal account. Seventh is goods destroyed by fire account. Now, it is also a loss of the business. So, whenever we see any loss, income, expense, it will be treated as part of the nominal account. So, again it will be treated as the nominal account. Eighth is purchase return account. So, goods goes out from the business. So, any transaction related to goods or asset will be treated as part of the real account. Next is sales return account. Now, sales return goods comes in the business. So, again it will be treated as a real account. Next is salary account. Salary is expense of the business. So, it is treated as a nominal account. Next is rent account. So, rent is again the expense of the business, it will be treated as a nominal account. Next is interest account. Interest can be the expense and it can be the income. If word received is not mentioned, we have to assume that interest is an expense of the business. So, again it will be treated as a nominal account. Next is commission received account. So, commission received is an income of the business. So, again it will be treated as a nominal account. Next is commission paid account. Commission paid is an expense of the business. So, again it will be treated as a nominal account. Next is bad debt account. Bad debt is loss of the business. When debtor is not paying money, then it will be treated or as a bad debt and it is a nominal account. Next is depreciation account. Depreciation is considered as the non-cash expense of the business. So, whenever there is an expense, it will be treated as a nominal account. Next is goods issued for advertisement account. So, again whenever we are incurring any expense, it will be treated as a nominal account. Next is discount allowed account. Again it will be the expense of the business. So, it is nominal account. Next is discount received account. As we are receiving discount, it is income of the business. So, it will be also treated as a nominal account. Next is interest on loan borrowed account. So, whenever we are borrowing any loan, interest paid on borrowed loan will become the expense of the business. So, as it is expense of the business, it is treated as a nominal account. Next is capital account. Now, capital is provided by the owner of the business, and that is why it is treated as a personal account. Next is drawings account. So, amount withdrawn by the owner from the business, again it is the owner's account. Capital and drawing, both the accounts are the owner's account. So, again it will be treated as a personal account. Next is Gujarat University account. Now, Gujarat University is an artificial person in case of accounting. So, again it will be treated as a personal account. Next is Minesh's account. So, Minesh is a natural person. So, again it is a personal account. Next is Prem and Company Limited account. So, Prem and Company Limited is an artificial person from the perspective of accounting. So, it will be treated as a personal account. Next is Rajpath Club account. Rajpath Club is also an artificial person. So, it will be treated as a personal account. Next is debtors account. So, group of artificial or any natural persons. So, it will also be treated as a personal account. Next is creditors account. So, group of artificial and again the natural persons, it will be treated as a personal account. Next is SBI account. So, SBI bank is also an artificial person from the perspective of accounting. So, again it will be treated as a personal account. Next is prepaid account. Now, be careful, whenever there is an outstanding prepaid word is in prefix or suffix, we have to assume them as a personal account. So, it can be an artificial or natural person. So, it is a personal account. Next is outstanding salary, again it will be treated as a personal account. Next is shares of Reliance company account. So, whenever we are talking about shares of Reliance company, so share is an asset of the business. So, it is real account. But if the name is share of Reliance company instead of share, if it is mentioned that Reliance company account, then it will be treated as a personal account. Next is building account. Building is an asset of the business. So, it is a real account. Same is the case with the land account and furniture account. Both are asset of the business. So, it will be treated as a real account. Next is Reliance company account. It is personal account as it is artificial person. Next is donation account. So, it is also the asset of the business and it will be treated as a real account. Next is cash account, and cash is also the asset of the business, it will be treated as a real account. Next is stationary stock account. So, any stock is asset of the business, so it is also treated as a real account. The last is patent account. Patent is also the asset of the business. So, again it will be treated as a real account. Let us once again recollect the summary of rules of accounts. Personal account, debit the receiver, credit the giver. In case of real account, debit what comes in, credit what goes out, and then nominal account, debit the expenses or losses and credit the income or gain. Now, under the double entry system, first debit effect is recorded always and subsequently second credit effect is recorded. After having explanation about identification of nature of account, let us see the illustration on account to be debited and credited from given transactions. As discussed, there are three types of account: personal account, real account and nominal account. In case of personal account, the rule is debit the receiver because benefit is received by the receiver and credit the giver because benefit is received from the giver. Now, in case of real account, the rule is debit whatever comes in and credit whatever goes out, and in case of nominal account, the rule is debit the expenses or losses and credit any income or gains. Now, we will start with the first transaction. Mr. X introduced rupees 2 lakh as capital to commence the business. Here cash comes in the business. So, cash account which will be treated as a real account, we have to debit as cash comes in the business, and then owner who is the giver. So, the second account, that is capital account, which is treated as a personal account. When owner is giver, so we will credit the capital account. Second transaction is rupees 25,000 deposited in Bank of India. Here the first account is Bank of India account. As we have already seen, Bank of India is an artificial person. When we are depositing cash in Bank of India becomes the receiver. So, rule of personal account, debit the receiver because benefit is received by the receiver. So, we will debit the Bank of India account. And then second account is cash account. As we are depositing cash, cash goes out from the business. So, cash is part of the real account. So, we will credit the cash account. Third transaction is goods purchased on cash rupees 10,000. Here the purchase account will be debited because purchase account is part of the real account, is treated as the real account. So, rule of real account is debit whatever comes in and credit whatever goes out. So, we will debit the purchase account as goods comes in the business. The second account is cash account. Cash account is also treated as real account. So, cash goes out of the business. So, rule of real account, debit whatever comes in and credit whatever goes out. Here cash goes out of the business. So, we will credit the cash account. Fourth transaction is goods purchased from Atul rupees 20,000. Here we are purchasing the goods. So, first account is purchase account. Purchase account is treated as real account. So, rule of real account will be applied, debit whatever comes in and credit whatever goes out. So, we will debit the purchase account as goods comes in business. The second account is Atul's account. As Atul is the giver, it will be treated as a personal account. So, we will credit Atul's account as goods is given by Atul on credit. Fifth transaction is goods sold to Param for rupees 12,000. Here we are selling goods to Param. So, Param is the receiver. So, first account, Param's account will be debited, and second account, that is sales account, goods is going out of the business. So, we will credit the sales account. Sixth transaction is purchased furniture for rupees 13,000. Here we will debit the furniture account as furniture is treated as a real account. So, rules of real account will be treated, debit whatever comes in and credit whatever goes out. As we are purchasing furniture, furniture comes in the business. So, we will debit the furniture account, and as we have paid cash to purchase the furniture, cash account will be credited, and cash account is part of real account, is treated as real account. So, rules of real account will be applied, debit whatever comes in and credit whatever goes out. So, cash is going out while purchasing. So, cash account will be credited. Next is salary paid rupees 5,000. Salary is an expense of the business. So, rules of nominal account will be applied, debit the expenses or losses. So, we will debit the salary account, and cash is going out of the business. So, rule of real account will be given, credit whatever goes out. So, cash account will be credited. Next is dividend received rupees 8,000. Here we are receiving cash. So, cash is treated as real account. So, debit whatever comes in and credit whatever goes out. So, cash account will be debited, and dividend received is income of the business. So, rules of nominal account will be applied, credit the incomes or gains. So, we will credit the dividend account. Next is machine purchased from Rajesh for rupees 50,000. Here we are purchasing machine. So, machine account which is treated as a real account will be debited as machine comes in the business, and Rajesh, who is a natural person, so personal account will be applied. So, rules of personal account is debit the receiver and credit the giver. Here Rajesh is giving the benefit of machine on credit. So, we will credit Rajesh's account. Next is loan obtained from Dhaval rupees 75,000. Now, we are receiving cash. So, again cash account which is treated as a real account, rules of real account will be applied, that is debit whatever comes in and credit whatever goes out. So, cash is receiving, so cash comes in the business, so we will debit the cash account, and Dhaval is the giver, Dhaval is giving the benefit of loan, so we will credit Dhaval's loan account. Next is rent paid rupees 5,000. Now, rent paid, rent is an expense of the business. So, rules of nominal account, that is debit the expenses or losses and credit the incomes or gains. Here rent paid is our expense, so we will debit the rent account. As we are paying cash, rule of real accounts will be applied, that is cash goes out of the business, so cash account will be credited. Next is goods returned to Atul rupees 3,000. Here we are returning goods to the Atul. So, Atul is the receiver. So, Atul's account will be debited, and as we are returning goods, goods goes out of the business. So, purchase return account will be credited. Next is Param returned goods of rupees 5,200. Here Param, who is our debtor, is returning goods to us. So, goods comes in the business, so we will debit the sales return account, and Param is the giver, so we will credit Param's account. Next is Mr. X has withdrawn cash of rupees 3,000. Here the owner is receiving benefit from the business, so owner's account, drawings account is debited and cash goes out of the business, so cash account is credited. Next is goods of rupees 6,000 destroyed by fire. Here we are incurring loss because of goods destroyed by the fire account. So, any loss or expenses are debited as per the rule of nominal account. So, we will debit loss on goods destroyed by fire account, and goods goes out of the business. So, we will credit goods destroyed by the fire account. We have seen that in the double entry system, every transaction has two folded accounting effects. For recording purpose, three types of account: personal account, real account and nominal account, and their debit credit rules are developed in accounting. Depending upon the nature of transaction, debit credit effect will be passed. It is possible that number 1, debit and credit effect can be passed within the same type of account, that is goods purchased on cash for rupees 25,000. Here purchase account will be debited and cash account will be credited. So, purchase as well as cash both are real accounts. So, from the same type of account. And then second is debit and credit effect goes to different types of account. For example, rent paid in cash rupees 4,000. Being nominal account, rent expense will be debited and cash will be credited, because cash is going out of the business, as cash is our asset. So, rule of real account is applicable. So, in this part 4, we have studied about concept of double entry bookkeeping system. We have studied how this system works in practical fields. The double entry bookkeeping system records every transaction with two effects, a debit and a credit. Then second, we have discussed about the features of double entry system. The features of the double entry system clarify any misconception about it. Features include the debit and credit effect of each transaction with identical value and requirement that the total of debit and credit effect remains the same. Then we have talked about the stages of the double entry system, that is the stage of double entry system explain its process to reach the final destination, which is the preparation of final accounts. The stages include recording transactions in the journal, posting it to the ledger and preparing trial balance and then the final accounts. Then we have talked about the benefits of double entry system. Every system has its own useful effects. The double entry system provides various benefits to its users such as the measurement of profitability, disclosure of financial position, usefulness for the managerial decisions and fraud detection. Then we have talked about the dual effect of transactions with the help of the illustration, and lastly we have talked about the account to be debited and credited from the given transactions with the help of an illustration. In part 5 of fundamentals of accountancy, we will discuss about types of transaction, types of assets and liabilities, fundamentals of accounting equation. Guys, I hope you have liked this session. We will meet again in the part 5 of fundamentals of accountancy. Thank you.